Hey guys, welcome back. Now, this month we could be seeing another historic moment in the crypto market as the Ethereum ETF is set to go live in the US. And even though crypto may be struggling right now, Bitcoin is still up 25% from when it launched and was the most successful ETF launch in history. Now, one of the companies that launched a Bitcoin ETF was VanEk, and they'll also be one of the companies launching one for Ethereum. Now, what you may not know is that in order to educate the institutions and retail investors on what Ethereum is, they've recently created a report with a huge price prediction, and it's a huge $22,000 by 2030, which would be a massive 500% increase from where we're at today. VanEk have been in the traditional financial world since 1955 and have close to $100 billion of assets under management. So clearly they know a thing or two about investing. And so in this video, we'll be covering the latest price prediction by VanEk, then the reasons why they believe it's going to happen, how they will be talking to the institutional investors about Ethereum and digital assets, and then we'll finish with their recommended portfolio allocation and where Ethereum fits in the traditional 60-40 portfolio. Okay, so first up, let's start with the big price prediction just made by VanEk and the reasons why they believe Ethereum is going to explode higher from here.
It's super helpful to be able to go to a fund manager and explain that this is a novel asset that has 20 million monthly active users, $4 trillion in settlement value in the last 12 months. Ethereum has facilitated almost $6 trillion in stablecoin transfers. And the centerpiece of that financial system is this ETH token. And we think the ETH token is going to compound at an annual growth rate of 38% over the next 5 years to achieve our price target of 22,000.
And so jumping right in, this is the big price prediction made by VanEk, the $100 billion investment firm. And this is their price target for 2030, and they have a base case, a bull case, and a bear case. Now, the base case is based around the smart contract market share. And they're saying this would be if Ethereum could grab a 70% market share, 90% for the bull case and just 15% for the bear case. Now, we'll break down these individual numbers in just a second of how they get to these figures. However, the base case for VanEk, as you saw earlier, is $22,000. And today, Ethereum is about 3,000, which is a 7 times increase from today. So this would be extraordinary performance when compared to anything else in the traditional financial world, as people looking at this will also be looking at the S&P 500, emerging markets, gold, property, etc. So these really would be stellar returns. And if that wasn't big enough, check out their bull case. Based on taking a 90% market share, they're saying it could go up to $154,000 per coin, which is crazy. And on the flip side, they did do a bear case, taking it all the way down to $360. So clearly, they're covering a massive range here. But as for the base case, it's looking very, very strong. And they did include a couple of other charts. This one is Ethereum's daily active users, which over a 5-year period has been growing at 71%. And what's interesting here is what's happened in just the past year. So we know there was an epic crash in 2022, but if you look at the daily actives, it doesn't really show up here. We know 2021 was a massive year for crypto with huge runs, but again, not a lot of movement here. And it's literally this year where the Ethereum ecosystem has started to go bananas. But just this year, they had a record 2 million, which has now doubled. And then the other thing they put together was Ethereum's revenue per user. And interestingly, they're highlighting here that when it compares against some big Web 2 businesses, Ethereum's looking really strong from a revenue per user. So Ethereum standing at $172, and then you have mega giants like eBay being under half of that. We have PayPal, Facebook, Instagram, Venmo. So it just highlights how strong Ethereum's revenues have been. Now, let's hear from VanEk as he breaks down exactly how Ethereum could get to this $22,000.
So the parameters are the size of the markets that Ethereum can disintermediate. And so that starts with like just the top line revenue for these sectors: finance, marketing, advertising, infrastructure, AI. And that sums currently to about 13 trillion in addressable revenues that Ethereum can go after. The second parameter is the market share for crypto overall. What percent of those revenues can they actually disintermediate? And those numbers, depending on the sector, range between 5% and 20%. And in our base case. So this is not a scenario of mass adoption. Even in our base case, the penetration rates for crypto are relatively low. The third parameter is Ethereum's market share, which we assume for all of our base cases, because this is a kind of winner-take-all world, that the number one chain gets about 70% market share in the base case, 90% in the bull case. And then, we have to pay away some costs to validators. We assume that all of the profits are taxed at 15%. What that ends up with is that we forecast that the Ethereum network will generate $66 billion in free cash flows that accrue to the ETH token. And when you multiply that by 33 and then divide by the 100 million coins, it's 22,000 per coin. What we wanted to do was give our clients some examples of how BTC and ETH together have impacted a traditional 60/40 portfolio. And so we performed that analysis with more than 150 sample portfolios, and we introduced incremental additions of crypto exposure, starting with 0% and moving up to 6%. And what we found was that each time we add more crypto to this traditional 60/40 portfolio, the portfolio's Sharpe ratio, which is a measurement of return divided by risk, continues to increase. So the max 6% allocation produced the best risk-adjusted return. And the really surprising part was when for investors who can tolerate relatively high risk portfolio allocations, so something like a 20% annualized volatility, which is not crazy for a young, healthy, working person, then an allocation of up to 20% in crypto keeps improving that risk reward. And then the other thing that we did is that we did a measurement of BTC and ETH volatility adjusted. So what's the best weight to own of those two assets that combined, which will provide the best risk-adjusted returns? And on that, we see roughly a 70-30 weight of BTC and ETH as providing the highest Sharpe ratio.
This month we'll likely see another historic moment in the crypto market as the Ethereum ETF goes live. Ethereum is playing in a $15 trillion addressable market, and the question is, how much of that market is Ethereum going to get? VanEk believe we will be seeing a $22,000 Ethereum by 2030, which would be a 500% increase from where we're at today. And interestingly, they recommend up to a 20% allocation to crypto if you can stomach the volatility, as it would give a relatively small downside to the traditional 60-40 portfolio. However, it would massively increase the upside on a risk-adjusted basis. And finally, they believe a split 70-30 between Bitcoin and Ethereum is the ideal allocation. So there you are, guys. Hope you enjoyed. So a huge price prediction from VanEk, and let me know your thoughts below, especially with everything going on right now. If you do have any questions or comments, post them below. However, just remember, to get rid of 100% of the comment spam and trading bots that plague YouTube comments, we are trying out the new SuperThanks Commenting system. So to get your question or comment read and replied to, or just to say thanks, then use SuperThanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.